stock market morning prep video for Tuesday, October 14th. Markets red across the board. The selling continues. We did get a little bit of buying early on in the morning where the markets tried to recover. Actually pushed up into right around 2 o'clock, and then it just gave it all up. The market sold off pretty hard. So we are now even more oversold than what we should be. We were looking for a little bit of a bounce, and we did get the bounce. We did get a little bit of a bounce, but no follow through. So we ended up back at the lows again. So I want to show you just a couple of indicators. The McClellan oscillator was basically right about here, and I did say we could move down a little bit more, and sure, and yet again, believe it or not, we could move down yet again to get to these oversold numbers. Now, we really want to see, 70, 80, 90, negative 90 percentile in this areas, and that'll give us a pretty decent washout number. So the McClellan oscillator is still telling us that there could be a little bit more room to run, maybe another day or so before we get a big rip-your-face-off type rally, and that's common when the markets are down. I mean, the markets are down almost now 2 weeks, pretty much straight down, so we are very oversold in the short term, so you need to be careful looking to get short the market down at these levels because we could really turn to the upside. And I think that retracement rally is going to be sold into. It just looks different. I mentioned that weeks ago. And to be quite honest, I am looking for anywhere between a 15 and 20% correction. And again, it's an estimate. It does not mean that it's going to happen. But as of right now, it does look that we could get somewhere near there. I believe we're about 5.5% off the highs. And it's, another 10% or so, even 7%, it's easily achievable at the moment. Now, if you look at the SPX versus the ATR, you see that we're at extreme levels here. So we are pretty much ready to go. I'm going to show you some levels in the ES where I think maybe we might get a bounce. We're getting close to the IWM I mentioned the last couple of days, 103, that we broke that one pivotal area. So let's take a look and see what we have here. As you can see, money continues to flow into bonds. Bonds were closed today. The bond market was closed, so let's see. We get probably get a really big capitulatory spike to the upside. We are oversold. You can see that in the RSI. So bonds playing catch up from today. I think you get a big spike up this morning, and then let's see what happens, and then maybe the kind of reverts back to the mean here. So that's what I'm looking for bonds. Now the ES, I want to show you the monthly chart. This is a monthly chart. We have broken this big bearish rising wedge from the March 2009 lows. Now remember, it's monthly, so it needs to close on a monthly basis. They can easily retrace most of this candle. But again, it has to close below this lower candle. So as of right now, it's breaking down on a monthly chart. And if that happens, you're gonna look for at least a 20 and possibly the 50-day moving average back down to 1600 or so. Okay. Now again, this is extreme. This is a monthly chart. We still have, I think, 17, 18. Probably about a good 2 weeks left of trading, at least 2 weeks. So this could easily change. But I just wanted to show you a picture of this monthly chart of the ES. Let's take a look at the hourly chart. And on the hourly chart, you see way back when, back in early August, we identified that inverted head and shoulders. We met our target, and we did the same on the head and shoulders target. We met the target of 1922. Now, we're coming into some downside targets. I have a 1272 extension coming in at 1855, 1860-ish area. We're not that far away. And then, of course, 1840, and then down below at 1820 here. These are some good two areas, and then 1618 is not too far away from there. So these are some really good targets here. You might want to write down and see if we can achieve that, and that's on a 4-hour chart. Okay. Take a look at the diamonds. We broke the 200, smashed right through it, and now the next target's going to be the 160.85 in the diamonds here. Okay, so that's the 1272 extension. A lot of selling. You can see major distribution here. So this selling is definitely for real. We want to see if it's going to be capitulatory at one point, and then we get some sort of retracement. Once we do that, and we can mark the lows here, then I can run some upside targets and see where our retracements, where possibly the retracement would actually stall and fail, and then we revert back down again for one big push lower. So we remember, like I mentioned yesterday, the Santa Claus rally and end of year rally, that could absolutely still play out, but just be cautious. Don't look to buy the dip right away. Get yourself a little bit of a base established in a stock that you're looking at, and then look to buy that on a breakout, because I do think this is a little different here. Take a look at the transports. Really just destroyed the 200, ripped right through the 1272 extension. Next one is going to be the 1618 here coming in. You might get a little bit of right around 36 and a half to 35 and a half, right in this area here. But I mean, literally just got destroyed, just dumped all the way down in the last 4 or 5 days. So this is real selling, guys. So you got to be careful here, and the selling happens rather quickly. IWM 103 is going to be your area. And then below that will be the 1272 extension of 101.50. I put the downside targets for you guys as well. So we have downside targets on all of the indices here that I mentioned. So write them down and just be aware of your surroundings that we could bounce. We don't have to get there. We could actually just hit that 103 in the IWM and just kind of revert right back down again. Revert right back up again. At least maybe back to the 108ish area. Okay, but you could see this is clearly taking all the indices down as well. And now you have weakness in the main leaders as well as the transports. And then again, let's take a look at the Qs, which is another leader. Just really got destroyed. Now it's really starting to move lower in extreme. See the big selling distribution today. We just took out that area of 93. 1272 extension coincides beautifully with the 200-day moving average. So this is going to be a heavy area of support. 92-ish. If we could break back down, maybe get some early weakness this morning, and then look for a reversal. That's what I'm looking for. I was looking for that this morning. We did get it, but it just failed at the end of the day. But it could have gotten a decent little gain to the upside, but then failed miserably. So that's not a good sign. And if you were looking at the charts all day, if you look at the tick reading, every time the tick moved up 700 plus, 800 sell programs hit the tape. Boom. Sellers came in and just literally, smart money just started pounding that. So every time we had some buy interest come in, sellers came in and just kind of stalled that move higher. So that to me was a little scary, knowing that there's some big sellers even down at these areas here. So getting long today was definitely not my cue. So you need to pay attention to the intraday moves. Vol spread's a good indicator as well, like I mentioned many times. And the tick, keep an eye on that tick, because when that tick reads 700 plus, and then you see it automatically revert back to the downside, back to 0, maybe 300-400. That's a big move from 700 plus back to negative 400, let's say, in a matter of seconds. That's telling you that sellers are coming into the market, and eventually they're going to win for the day. So just take note of that, okay? All right, guys, have a great day. Be safe out there, and we'll speak to you tomorrow with another update. Take care.